you could take the narrative that, hey, the SEC just wants to destroy the crypto market. I honestly don't really believe that. I think they really want to regulate it, and I think they want to be looked at as doing things the right way. And so it does irk me a little bit that it's, that these allegations were made, because it's like there's got to be, they wouldn't just pull them out of thin air, but hopefully CZ has a good explanation and can kind of deal with it and make things right. Because I do think overall, the crypto market has taken a lot of shots, right? Whether it's FTX, whether it's these other things, and Binance could arguably be the biggest one. So you do hope it is nothing big there under the rug. And I think as investors, it's one of the reasons why you would probably agree that the safety is probably with Bitcoin at this point in this type of environment we're in, with possible issues like that, but also with the way liquidity is in the system. Do you think the Fed is right now more inclined to say, forget the labor market, we got to still raise rates? Or like essentially, if you get into a situation where you have stagflation, right? Does the Fed cave under stagflation, or do they stay strong and continue to fight the inflationary side of that?
U.S. stocks had a mixed start to the holiday-shortened week, with investors focusing on the Federal Reserve's upcoming policy meeting. The Dow Jones Industrial Average dipped 0.1%, the S&P 500 was down 0.1%, and the NASDAQ Composite rose 0.1%. Investor sentiment turned fragile as evidence of a global economic slowdown emerged. Chinese services and eurozone business activity slowed. The Composite Purchasing Managers Index hit its lowest level since November 2020. Goldman Sachs lowered the probability of a U.S. recession to 15% from 20%. Positive inflation data and a strong labor market influenced this change. Fed Chair Jerome Powell's cautious approach hints that a September rate hike is unlikely. Several Fed speakers this week will offer more insights into monetary policy. Disney urged Charter Communications' Spectrum cable service customers to consider Hulu as the companies dispute a new distribution deal. Weak Chinese services data weighed on oil prices, but expectations of output cuts from OPEC Plus members Saudi Arabia and Russia limited losses. Brent crude futures for November rose to $88.71, and U.S. West Texas Intermediate Crude WTI. October futures increased to $85.73. Anticipation of supply cuts from Russia and Saudi Arabia drives oil prices. However, rising U.S. oil production may limit significant gains. Russia and OPEC partners have agreed to export cuts, with an official announcement expected this week. Saudi Arabia is likely to extend a 1 million barrel cut into October. The global crude market may loosen due to refinery maintenance. Supplies of sour crude will remain tight due to OPEC Plus cuts. U.S. job growth increased, but the unemployment rate rose to 3.8%. Expectations of the Federal Reserve not raising interest rates this month solidified. China's manufacturing activity expanded in August, curbing pessimism. Beijing's economic support measures also contributed to stabilizing prices. Investors await further moves to support China's property sector, a significant economic concern since the pandemic. Let's continue our discussion with Gareth Soloway.
For me, again, this is just replicating, unfortunately, the bearish price action we've seen. I love drawing the comparison. Here you had Ripple's news and the pop, and then in one day we reversed that entire move. Here it was a little like it's bearish to reverse a move in one day. Like that's as bearish as you can get. When you go up like that on news and you reverse it in one day, that's like 90% bearish. Here we had the grayscale news, right? And we reversed it in 2 days. All right, so that's a slightly less bearish, but it's still heavily bearish price action. And so essentially what you want to see is when good news comes out, you want to see the pop, which is what we get, right? But then you want to see more like this kind of action where it's digesting the news. It's not reversing the news 100%. So the price action is still bearish to me. To me, it still signals that we still have some downside to go until we start to see better price action. And I still have my level just below 25 here that I think will be hit sooner than later. And then the big question from there is, do we head down towards 20? One of the things I thought was interesting, and this is just, a lot of people have been talking, and I've even seen you talking about bear markets and how long they last, and, whether or not this is the longest bear market, is it not? But it's interesting just to take the high from 2017, and that was about 364 days. I might be off by a day or two. But if you take the same sort of thing from the high of 2021 to the low, so high to low of the cycle, high to low from the cycle, almost to the day, it's literally on point. Now, if you go back to the earlier cycle in, the cycle prior, it was 400 plus days. So it's only it only is intriguing in the last two cycles. This, by the way, doesn't make me think that the cycle's over, the bear market's over, but it is just a fascinating thing to think from peak to trough, it's almost identical in terms of days. And based on the price action, and price action is always the dominant factor for me. Whatever I think or feel doesn't really matter. It's what the charts are really telling us in the price action. So yeah, I agree that in general, you probably look for a move down, and then there'll be bounces along the way because nothing goes straight down, and you have to kind of coax some bulls back on. But in regards to the S&P making lower lows, which is what you mentioned, is part of that is when you get a low and you get a significant bounce, much like the October low in the stock market, there's a lot of people that say that is the low of the cycle. And markets have a tendency to want to flush those people out and stop them out, which is you take out that low. And like you said, last time it didn't happen in crypto because the Fed came gangbusters with lots of liquidity. But it's just the nature of it is that bear markets have a tendency to wash out any bullish sentiment. And then once you have no more bull sentiment, there's only buyers left. They only have money on the sidelines where they can come in when things start to improve. But yeah, it wouldn't shock me. I mean, I've been in that camp for a long time that I didn't believe that 15.5, 15.7 is the low. We'll have to see if that's correct or not. We probably will know in the next 12 months. You have a scenario where the Fed has been trying to slow the economy to kind of bring down inflation. But as this narrative of soft landing or no landing has taken off, and we see the employment market or the jobs market remain relatively strong, then you're now seeing this kind of situation where we're starting to see commodities move back up, which is then going to make it harder for the Fed to print money or even lower interest rates. So it's really like this double-edged sword of where it's you get things down to a point and you do it the right. Like think about that. Think about how warped this is, Ben. It's like the Fed is trying to do this perfect landing, and by doing a perfect landing, they're going to push oil up, which will then make it an imperfect landing by pushing up inflation, which will then make them have to be tighter for longer. Point on oil, the massive run that oil had from 2007 all the way into 2008, right? Into mid to late 2008. And I think what's interesting here is if you go back to the comments by not Jerome Powell, who was the one? Bernanke. So Bernanke going into this period, it was also expected that the Fed, I remember him vividly. I looked this up. He was saying, oh, it looks like we're going to avoid a recession. We're not pricing in a recession. And you saw oil make one of the most powerful moves to the upside before, guess what? We had a major recession, and then oil ended up collapsing. So, I think one of the amazing things about price action is that it repeats over and over again in different environments, but the same things kind of are behind it, which is human emotion, right? I mean, the same kind of thought process. Hey, we're going to land this plane perfectly on the runway. So it causes this, oh, well, then the economy is going to speed up and everything's going to be great. Oil rips higher. And then when the rug gets pulled, essentially, you see the very fast collapse. And so it makes me think that a very similar thing is going on here as we move up. We haven't obviously had the type of run that we did back then yet, but it is worth keeping an eye on.
Don't forget to join us as we explore the unfolding events.
A lot of the crypto charts don't look very good right now, and Binance is no different. Basically, what we have here, we had this little bit of a consolidation, and we broke below it. Look at how it retraced right there. This was on that grayscale news, how it went up. And this is the amazing thing about charts is that you have this pivot low here, then it touched right here, and then it broke, and then it seems to always come back to that line to kind of retest. It's almost like home base, if you will, and then it kind of continues down here. And you are making a little bit of a bearish pattern again. So this, by the way, this doesn't tell us anything in regards to whether or not those allegations are true or not. It just tells us what the overall crypto market is behaving like right now, which if it does break down, the next logical stop is going to be the low from 2022, which is around $185 on Binance.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.